Deputy Donnelly.
Thanks, Chair. Ms. Nolan, can I start with a question for you? You said that the government's position is that if the successful bidder does not adhere to the CCMA, that the government will legislate to essentially force them to adhere to the CCMA. How will you know?
Well, obviously we will keep we will keep in contact with them for a start. But secondly, and far more importantly, I'd imagine if they're not keeping to the CCMA, that the mortgage holders will write to us. That's normally what people do, and they'll write to deputies such as yourself, and you'll write to us. There's
two loan books have been sold so far, which was alluded to already, which is the GE Money and the Bank of Scotland Ireland loan books, the Pepper and an affiliate of Apollo. They have both voluntarily said that they will voluntarily adhere to the CCMA, and I hope they are. Is there any oversight of them? Is there any data coming into the department specifically on their adherence to the CCMA?
We're not an oversight body. The department would not have oversight, and obviously, if they did come under the CCMA, the central bank would fulfil that role. But I think, I suppose, the political system, such as it is, the way it works, and it works quite well on this, is if there is a huge problem in these areas, we do tend to hear about them because people write to their TDs, and their TDs tend to refer them to us. So I couldn't swear we haven't had any reps, but we certainly haven't had large numbers of reps in those areas, on those books.
Sure.
Donnelly replaced me in the chair for a moment. Okay.
Thank you. Can I ask, with regard to draft legislation, the GE book was sold to Pepper about 2 years ago, in April 2012. So there's been about 2 years. This has been an issue. There have been unprotected mortgage holders in the country for nearly 2 years now. Is there any draft legislation that has been prepared in the last 2 years as a result, such that the legislation could be brought in quickly?
I understand that the GE brand is in fact still covered by the CCMA.
Is regulated?
Yeah.
Okay. Thank you very much.
So that's not the case for this.
Okay, so that is, the Pepper book is still a regulated book.
Which is
our understanding is that they bought the branch and that retained the coverage.
Okay, thank you. Mr. Walls, can I talk about the this voluntary agreement? The trade are saying that the sale is down to a 2-horse race, and I know you can't comment either way. The trade magazines are saying that it's down to Oaktree Capital and Lone Star Funds. Now, Oaktree Capital, their own description, says that they emphasize an opportunistic, value-oriented and risk-controlled approach to investment in distressed debt. And Lone Star describes itself on its own website. It says Lone Star invests globally in distressed debt. So if it is these two funds, or funds like this, these are debt collectors. They may be very reputable, they may be extremely respectable and extremely professional, and in no way am I suggesting that they're not. But they're not banks. They are professional investors in distressed debt. Can I ask, on the basis that there's no voluntary agreement written down, whenever the successful bidder emerges, if they come out and say, we never agreed to voluntarily adhere to the CCMA, will we have any proof that they did?
Just 1 second, Deputy. Certainly in KPMG, we've emailed traffic confirming their agreement.
Have confirmed in writing?
Well, by email, yes.
By email?
Yes.
Okay, thank you. The last thing I'd like to touch on, if I may, is the PwC report. The committee asked for a redacted version of the report, and you took the call that you would have to redact it so much that it would be meaningless. Can I ask you to leave that judgment, final judgment, to us, and as soon as possible after this committee to send us the redacted version of the report and allow us to decide whether or not it's meaningless to us?
Okay.
Thank you. Can I ask, you stated earlier on, I just want to be clear on this, you stated earlier on that the report contains one proposed sales process.
What I said, Deputy, was it has a clear recommendation.
Does it compare options?
Just 1 second. No, it just gives the recommendation.
Does it allude to the mortgage holders being allowed to bid for their own loans?
Yes, because PwC, as we alluded to before, also read the representation responses.
And does the report analyse that option versus the recommended option?
It provides a clear recommendation, but it does go through a number of other issues.
Does it provide an estimated euro amount difference in the total sales value specifically for a process which allowed the IBRC mortgage holders bid, and within that context did everything to get the best sales value, and the one that you've chosen to go with?
No.
Is it possible that whatever that difference is would be more than compensated for in terms of exchequer returns by benefits to the families themselves and therefore to the extended economy?
I understand where you're going, Deputy, but the unfortunate position for us is that if there is any instance at all during the course of the liquidation that we can be held to have sold assets and undervalue, we are opening ourselves up to legal action by creditors in the liquidation.
I appreciate that, and I appreciate you're in a very difficult position, and I appreciate that some of your legal obligations may be I'm not suggesting they may be entirely contrary to what you would like to do as an Irish citizen. Absolutely accept that might be the case, and that you have a very tough job, and you've come in for some very harsh questioning. But there's an awful lot of Irish men, women, and children, their futures at stake, and therefore it's our job to try and protect their interests.
PwC give a recommendation, or was it on the basis of an administrative procedures that they said were extremely cumbersome rather than financial, in terms of would say mortgage holders be able to basically purchase their own mortgages?
Clear recommendation, Chairman.
Clear recommendation on what grounds?
On the best process as they saw it to sell the mortgage loans in IBRC.
Not financial.
Well, no, there are financial issues involved in it as well.
But did they provide hard figures to state why they were recommending? Like, it's Deputy Donnelly's question really, you're basing it all the time on the fact that to get the best return. So the question in terms of the recommendation of PwC, what's the criteria they used that you would get the best financial return by not allowing individuals to bid for their mortgages?
Yes.
But did they quantify, did they back that up empirically?
My understanding, just a recollection, let me just...
Sorry, Deputy,
There isn't direct numbers, but that does formulate part of their conclusion or recommendation.
Can I ask, are there orders of magnitude suggested in terms of the difference between let's say there's two scenarios. There's the scenario which you're going with, and there's the scenario which I'm very interested in having evaluated against what's happening, which is that the mortgage holders in some way get to bid. Has there been any indication given to you as to the estimated difference in total sales value from those two scenarios?
Well, I would say, Deputy, and I alluded to an issue in the US recently where the difference in net terms to liquidation was less than 500,000 euros, and the judge saw an issue in what we were doing. So I don't think we're talking a 1.8 billion par value book, whether it's, and I don't want to sort of make this seem unimportant, but from our perspective, if it's €100 or it's, $1 billion, it's still the same principle that we haven't got best value.
Maybe for you, but from our perspective as legislators, it's a completely different issue. For example, let's assume to your example, and I know it's not the case, that the difference is €1 million. Let's say PwC did the analysis, which I don't believe they've done, and it came out and said, well, actually, the difference is €1 million. We have made a stab at total sales value under the recommended process, and we have also, and I hope they have, we have also done an estimate of the sales value under alternative scenarios, particularly where the mortgage holders are allowed to bid. Let's say that total difference is €10 million. We then, as legislators, and Minister Noonan, as the guardian of the public purse, could say, you know what, we're going with letting the bidders do what they're going to do, and we, the state, are going to make up the difference, therefore protecting any question of a challenge from the creditor, because the total value, the total amount of money available to the creditors doesn't go down, but we potentially avoid thousands of families being unnecessarily evicted.
I think that's a very interesting concept, Deputy, but the problem is, if I was any other creditor in the liquidation, and there are significant other funds out there on a global stage, they'd be knocking on the government's door asking to do exactly what you've just done for the mortgage holders.
Fine. The question, thank you, the question is, have you been provided, has any number been provided to quantify the estimated difference in sales price by letting the mortgage holders bid for their own mortgages?
What we have been clearly told in our independent advice, that if we went down that road, we would not deliver best value.
I appreciate that. Can you answer the specific question I'm asking, though?
The number is only a factor of the valuation and what we get in as bids at the end of the day. But to ask PwC to put an exact number on it, I think is probably unfair to PwC, to be honest. But what they do have is the experience in selling loan books and the knowledge from both the representations and all the other information around the sales process in IBRC. And they've clearly given us a recommendation that we are following.
So can I take it from your response that you have not been provided with an estimate of the difference in total sales value by letting the IBRC mortgage holders bid on their own mortgages?
We've been provided with clear advice as to how to get best price for
as well. This is not a trick question. It's a very simple question. Have you not been provided with an estimated figure?
But to be honest with you, Deputy, what we asked PwC was to provide us with advice as to what is the best process to get the best value for the loans. And in terms of that summary report, there isn't an absolute number, no, but there is a very clear recommendation.
Do you know that PwC model both scenarios to come up with an estimate?
They modelled a number of scenarios, yes.
And was one of those scenarios allowing the mortgage holders to bid for their own loans?
It was considered by them, yes.
It was modelled by them analytically?
It was certainly considered by them.
Do you know if it was modelled by them?
I don't.
Okay. Thank you very much.